Hello, everyone. Welcome back to the Banker Next Door. I am your host, Dr. Joe Berquist. Hope everyone's having a lovely day today. Today, we're going to be talking about bank mergers and acquisitions, and we're going to get into a couple very specific things in the banking space. On the one hand, we're going to get into what is called a bank merger of equals, or what is known in the industry as an MOE. We're also going to get into fintechs trying to get bank charters or basically get approved to have a bank charter on a national scale through what's called the ILC bank charter, the Industrial Loan Company charter. And we're going to talk about why that's kind of an issue, why some people like it, why some people don't like it, what fintech companies have had success with that so far and what haven't. But first, let's start with merger of equals. So I'd like to get in. I've got an article here from S&P Capital Intelligence, and what it says here is basically we have a little bit of an uptick in merger of equals this year. So for anybody who doesn't know, anybody who's not familiar, a merger of equals when you have two equally sized banks or approximately equal in size that decide to merger together. So say you have a 500 million asset bank over here, and you've got a 600 million asset bank over here. They decide to get together, put together a bank that's now 1.1 million in total asset size. And, why would a bank do this? Well, a lot of banks do this because it's a lot faster to scale the bank. You get economies of scale built in. And now a bank's up to, say, they, again, using that example, they're up to $1 billion in asset size. And now they have a little bit more wiggle room there in terms of the revenue they're able to generate, the profit margin they're able to generate. They can have, they can develop better, what I want to say here. They basically develop better ratios for the bank itself, like ROE, ROA, efficiency ratios, things of that nature. And doing an MOE can be a lot faster than if you were trying to execute an organic strategy where you're trying to grow organically, either by building new bank branches, adding to your branch network, or you're trying to grow through loan development. Maybe you're opening up some what's called loan production offices. Maybe you're hiring a lending group, bringing them in. So there's a number of different strategies that you can deploy to try to do something to grow your bank. But an MO, doing a merger with an MOE merger can be a faster way to grow the bank and get those economies of scale going to generate a better return for shareholders in the long run. So what we've seen is a little bit of uptick in MOE deals this year, but definitely the deals are a little less than what they were back in, say, 2014, when you probably had about 15 of these deals. There's only been about 4 of them so far this year. Now, I just want to read in here. MOEs make up 6% of all U.S. bank M&A activity in 2023 through August, higher than the last 2 years. Moreover, the 4 MOEs announced so far this year represent a combined total deal value of about $659 million, or 25% of total deal value through August. While broader M&A appetite soured this year and led to a slowdown in activity, MOE activity was unwavering as banks increasingly viewed those deals as an attractive alternative to pair up and gain scale to tackle ongoing headwinds amid a lack of buyers and low valuations. These deals are especially attractive for smaller community banks. So again, that talked about a number of things. So, bank stock valuations have been down this year. We've had, 4 bank failures earlier in the year. Banks have been dealing with a number of issues, whether it would be uninsured deposits, negative results in their bond portfolios, the impact of rising interest rates on their commercial loan portfolios. So all of these things have kind of come together to kind of sour the M&A market a little bit this year. But like I said, you are seeing MOEs are moving along here, and I would definitely consider, or I would definitely think that you would see more of these transactions here as we move along. So the other thing happening, which I think is far more interesting here, is this article. Some fintechs walk away from charter applications, and they've decided that they'd rather just do leverage bank partnerships. So a couple of years ago, you had SoFi let's see here, October of 2020 was approved for a bank charter. And I have been watching this very closely because I've really been fascinated to see how this was going to play out. SoFi has seemingly done very well. They just had an earnings call and have done very well. For people that are not familiar with SoFi kind of started out as a basically like a student loan lender. They really tried to leverage that, and also being mainly an online bank, growing through and then started doing some consumer loans and growing through those different channels, and then basically a few years ago decided, hey, you know what? We want to be a bank, because we want to be a bank so that we can raise capital, we can bring deposits in, which will give us a funding sources that will make it cheaper for us to make loans out to not only consumers but to businesses as well. So this, I think, so far so good. This has gone really well for SoFi, and it raised the question, this worked for SoFi, so would it work for, say, PayPal? Would it work for Block? And that's exactly what happened. So, and it says right here, the last industrial loan company ILC charters supervised by state and federal deposit insurance corp were granted in March 2020 to Square, now Block, and loan servicing company Nelnet Inc. SoFi Technologies Inc. is the last fintech company to complete a bank charter application process. The fintech lender obtained that national bank charter from the Office of the Controller of the Currency, or the OCC, in October 2020, before acquiring Golden Pacific Bancorp in February of 2022. And it also goes on to say the dearth of bank charter approvals in recent years comes as the convergence of banks and fintechs continue to deepen. Many fintechs considering bank charters are finding that the growing banking as a service market can solve most of their needs for banking operations, industry executives and advertisers said. In banking as a service, banks provide deposit accounts or underwrite loans to fintechs and customers, while fintechs manage the relationship with consumers or businesses. So, and I should take a step back for a second. The ILC charter application has been a very contentious thing for quite a while in the banking industry. A lot of banks have looked at that charter as kind of like a backdoor way to get into the banking industry. It's viewed as kind of like an easier application process, an easier way to kind of get in. They have described it many times as a loophole, a banking loophole. And you have a lot of banking groups, the ABA, American Bankers Association, the ICBA, that have basically pushed for that loophole to be closed, to basically eliminate the ICL banking charter altogether, just get rid of it, because again, it's not about stopping fintechs from getting bank charters or not wanting fintechs to get bank charters. They just want them to do it the right way. They want them to go through a normal charter, process where, they go through and they're working with the regulators, whether it be the OCC, the FDIC, to get deposit insurance, but go through the normal process, the normal channels, get approved in a normal way, and then be subject to the same regulation that every other bank in the country is subject to. So there's been a lot of pushback. A lot of, certain members of Congress have pushed back on the ILC application as well. And you can see here that, a number of potential companies have pulled their application or withdrawn it in the last couple of years, just because they've just been sitting there with the regulators. And one of the comments here is, there's no way any of the federal bank regulators coming out of the 2023 banking crisis are going to want to pose any new risk in any way to the industry, i.e., they're not going to approve some of these bank charters to some fintechs that are perhaps unproven in their financial results. So, we go on here, select bank applications for industrial loan charters. You can see here, like, Ford Credit Bank has a pending approval that, was back in 2022. Capital Preferred Savings Bank, Ameriprise withdrew. Thrivent Bank has a pending approval, also a merger application. So there's a couple different banks that are still kind of hanging in there. So I think this is really interesting. I've talked to some people at PayPal, and it's been really interesting because I think they look at this dynamic in a couple of different ways. Like how would their stock be perceived? In other words, if you're a fintech company versus a bank, typically fintech companies, their stock is going to trade at much higher valuations than your typical bank would be valued at. And that all has to do with with growth. How is the market viewing your stock from a growth perspective? Most banks are just kind of steady as they go, pay a nice little dividend, whereas fintechs are supposed to be high flying growth companies that have they're the unicorns that have the hockey stick, and and they're just looking to grow like crazy. So but I think SoFi is proving so far that yeah, fintech company can come in and get chartered as a bank, buy a small bank and start doing operations and do it very very successfully. So I'll be real interested to see what Square does with this, and whether or not they, and Nelnet, whether, these two complete the process and kind of keep going with this. But again, something very much to keep an eye on and see how this continues, see what trends in the bank merger and acquisition field that this kind of plays out. But again, a lot of fintechs here are saying that what, we don't necessarily need the bank charter right this minute. We can make do with banking as a service, and that's something that I'll probably address in another podcast episode. Describe what exactly banking as a service is. There's a couple of very good examples of that, like the Bancorp Bank is a great example as a bank that provides banking as a service. So that would definitely be something I'd like to get into and cover in a little bit more depth in another episode. But right now, the big takeaways from this is just, M&A activity in the banking industry right now is very slow because a lot of the headwinds, but you are seeing merger of equals, MOE transactions are happening. And, so far, a lot of these fintech applications are not really going through. But the one bright spot has been the performance of SoFi. So we'll continue to see what's going on there. But I would ask everybody, if you like what you heard here, to please like and subscribe. You can follow me on YouTube, Rumble, and all major podcast platforms. If you have any comment on this, please make sure to leave that. If there's any topics that you would like me to cover aside from this, please leave a comment. Let me know. Be sure to visit the website at www.bankernextdoor.com, and I will be coming back again real soon. I've got some great updates coming on commercial real estate, interest rates, yield curve, and I'm going to hit. Bank Director just came out with their rankings for best banks in the country. I want to talk on that a little bit. Hopefully, point out some of the banks that are doing good things in around banking. But hope everybody enjoyed that. Hope to see everybody again real soon. And thanks a lot for watching. See ya.